Hey, coaches, welcome back to another episode of Natural Born Coaches, the podcast for your coaching business. I'm Marc Mawhinney. Today, we have back on the show the only former nuke submariner engineer that's ever been on Natural Born Coaches. He was last on back in July of 2021, episode number 721. And he's back here today. His name is Troy Brousard. And we're going to be covering something that you're going to want to listen to because he is sharing advanced financial strategies for coaches. So, Troy, thanks for coming back on.
Yeah. Hey, good to see you again. It's been a while. I think we were dealing with COVID still the last time I was here.
We were.
So, yeah. Great to.
All my willpower not to make, when I mentioned financial strategies about coaches who are underwater, given the whole submarine thing. But, I guess I did make the joke.
Hey, I always tell people I like to go really deep in this strategy,
Yes.
right? But it's in my nature as a submariner to go deep. So, yeah, no, it's great to be here, man. And I am a consummate coach. I have been a coach for decades at this point, and right now I'm still running, let me count the ways, 4 different coaching programs with about 1,200 or so people in all of those programs across the board. So this is very much something that is near and dear to my heart and my soul because I do it every single day. So, yeah.
Yeah. No, that's awesome. And I know you partner with Ben Settle on some stuff. He's coming back on the show. I think Ben's been on 4 times. It'll be your 3 or maybe 3. So, yeah, interesting, guys. Well, you guys are doing a lot of stuff and helping a lot of coaches. So anyone who didn't catch the previous time you were on the show, can you give the Cliff's Notes what you do? I know you're doing a lot of different stuff, but what is it that you're focusing on?
Yeah, so I have multiple businesses. I run 4 different companies. Most of them are in software services. Software as a service, SaaS, where those are the partnerships that I have with Ben Settle, our Berserker Mail platform, which is an email platform. And then we have a Learnistic platform, which is a learning management and app platform that we have, and some other things to that nature. But my biggest joy right now, and what I spend the vast majority of my time, it has a software component to it. It has a software as a service as well, but it's really a training program. And that is my low stress trading program, which is teaching entrepreneurs, business owners, how to leverage options trading in a highly, highly profitable and highly time leveraged and safe way. Now, nothing is truly ever safe in the stock market. I got to give that, you can always lose money in the stock market, right? But with us, it's about a 98% win rate. So really the only time that you're likely to lose is if you trade on a company that goes out of business, which unfortunately that risk is for all of us, right? It's a risk we face as entrepreneurs as well. So I think entrepreneurs understand that risk, but this has been the single fastest growing, most successful program that I've launched in decades of being an entrepreneur. And the reason is it just works, and people are getting results. And I wanted to talk to you about it from a coaching perspective because I just think there's some really interesting dichotomies with coaching that I think the coaching industry will really enjoy some of the things that I'm doing in my coaching businesses with it.
So can you define options trading for anyone who hasn't played, I say, that game before? What exactly is options trading?
So options trading is a way of trading on the stock market. We only trade on the U.S. stock market, but we have people that are students all across the world. So I think there's like 20-something countries now represented in our program. So you can live in New Zealand or Australia and still trade on the U.S. stock market, right? There's international trading brokerage accounts. The difference really between options and stocks is, quite frankly, in the name options, right? The name options, it actually means you have different choices. You have different ways that you can trade that you just don't have those same choices when you trade stock. And one of the things that is principal about options is the ability to leverage and create a larger income with less risk if they're used appropriately, right? And to really kind of explain it, like, believe it or not, options have been around since 340 BC. They've been there for that long. The first options trade was by this astronomer and philosopher, a Greek philosopher by the name of Thales, which, funny enough, is my son's name. And I didn't name my son after, my son was named after him, but I didn't know that at the time that he was an options trader. It was really kind of funny. But so yeah, he's the seed story of options. And what he did is he was an astronomer, and he could kind of predict the weather patterns based on astronomy. And so he said he knew that there was going to be a good olive crop coming in the next year, in the next season. And he wanted to be able to really be highly successful with that on a transactional basis, right? He wanted to go out there and create a bunch of olive oil. But the problem is there's only so many olive presses in the region, the factories that could press the olives and make olive oil. And there was a lot of competitors, and they would fill up, and he wouldn't be able to get enough to really make it make sense. And so he had this thought, and he said, I know it's going to be a great season next season. I know it's going to be a great crop, and I don't think most people know that. So I want to leverage that knowledge. And so what he did is he went to all of the olive press, people in the area, and he said, "Look, I want to make you an offer you can't refuse." we'll mix some mafia with it a little bit, and he said, "Look, you don't know if it's going to be a good crop next year. It's a toss-up. The weather may go against us when we have a bunch of storms. You may have almost no business for your olive presses next year if the weather's bad. What I'd like to do is I'd like to pay you a small amount of money today, and you'll get to keep that money regardless of whether it's, a good crop or a bad crop. You get to keep that little deposit, right? And all I ask is that you give me the option of getting exclusive use of your olive presses in the upcoming season. Now, for me to exercise that option, I'm going to have to pay the full market price. So you're still going to get the full market price for your services, in the spring, but I'm going to pay you a reservation fee essentially now. And if the market goes bad, you get to keep that money." So it was a no-lose proposition for them, because they would get their full billing rate in the spring regardless, but they got to get some money up front, right? And that was a little bit of a hedge for them, right? Because if the weather went bad and they were not going to have any business that next season, they would still at least have the income from that hedge that they made with the deal. And so it was a great deal for everybody. It was a great deal for him, because if the weather went well, he could lock up all of the olive presses in the entire region, and he would have exclusive use of all of them. So he would be able to massively cash in on his crop and profit from that, and eliminate his competition at the same time, right? Like, it was a huge win for him. And he had to put up some money up front. So there's a little fee that he had to pay up front. And he's risking that. He's saying, I'm willing to risk that small fee. That is the definition of a call option. A call option is for something to go up, to go positive, right? So that he was betting on good weather, right? And he was willing to pay a small fee for that to lock in that option. And so an option is really just a contract that has an expiration date in the future, and it has a particular value associated with it. And that's really it. The difference that this makes for traders is because now the contract itself, not the stock, but the contract itself has value. Right? So imagine, now Thales did go on and have a great production and made a bunch of money off of that contract, okay? But let's flip it for a minute. Let's say that a month after he paid all of this money and he bought all of these options, right, to have access to the olive presses, let's say that he changed his mind. Well, he could sell that contractual obligation that he had, that contract, he could sell it to somebody else and make profit on it, even without having ever produced a single olive, right? The contract itself has value, right? You can think of this as, like, think of a real estate agent that has some friends that live on the coast that are contemplating selling their house, right? Now, he's not an agent, he's not a broker, but he has the contact, he has the access, and so maybe he sells a contract to negotiate the deal, even though he's not a broker, and then he just pays a broker a brokerage fee to close the deal. But without him, you don't get it, right? So he has that control. This is what options are all about. Options trading is about leveraging access to a block of 100 shares of stock and being able to do that in a very intelligent way. Now, most people, when the very time they hear the word options, they think high risk and you lose a lot of money with options. They've heard a lot of negative stuff in it because it's highly regulated in the industry. There's all kinds of people that have lost a ton of money on options. The problem is they don't understand that with any contract, there's a buyer and a seller, right? And the people that are buying those contracts, everything is at risk, right? Just like Talus and buying those olive press contracts, right? If the weather goes bad, he loses everything. He loses all the money that he paid. It's gone. And he's not going to have any olive oil to produce, so he's not going to have any profit, right? So he loses everything. Well, when you buy options, that's the problem. You have to be right on the price direction. So if you're buying a call option on Tesla at, 280 or something, then you're essentially, saying, I believe Tesla's going to go up to 280. Well, if it goes down, you lose everything on a call option. If it even goes sideways, you lose everything. Even if it goes up, but it goes up after the end of the contract, you lose everything. It doesn't matter because you're not just buying the direction, but you're buying it in a specific time frame, right? And so it's buying call options or buying put options, either way, it's really risky. And about 70% of consumers that trade options in this manner lose everything on it, right? It's very difficult. You have to be correct on the direction, you have to be correct on the time frame, and you have to be correct on how big the move is. So let's say that I get the direction right, it goes up. I got the price point right. I said it was going to go to 280, it's 282. And I got the time frame right. It did it before my expiration. I'm a winner, right? No, because you had to pay money for that contract. And let's say you paid $500 for that contract. Well, if it doesn't go to 285, if it doesn't go up high enough that you make that cost of your contract back too, then you still lose, right? You may not lose everything, but you're still going to lose some money. So buying options is highly speculative. And it's very, very risky, and you must be right on these three things: price, directionality, and magnitude, right? But selling options, super, super conservative. Just the opposite. When we sell an option, we get paid our premium upfront. So the day that we sell, we sell weekly options, so we sell on a Monday, and we get paid right then, okay? And so we've got our cash back, but we still have the contract tied up for the week, right? So let's say it's a $10 stock. We put up $1,000 for the week, okay, for that option, and we make maybe $20 on that transaction. Doesn't sound like much. You think, well, Troy, that's only $20. But $20 divided by 1,000, that's 2%. And you made that 2% on your money in a single week. This is the magic of what we do. We have a framework that I've developed and created after doing tens and tens of thousands of trades. At this point, I've lost track. Last time I checked, it was over 25,000. I think at this point, it's probably over 30,000 trades that I've done. I trade 24 different accounts because I have multiple businesses. I got a whole lot of kids that I trade options for. And we'll talk about that in a second too, which is really unique. So I do a lot of volume with it. And in that time, it only takes me about 2 hours a week to do the trading. And for that, I have a 98% plus win rate. And I make that 1% or so every single week on the money. But when you think about that, this is why not many people trade options in this way. Most people go for the buying options because that's where they think all the big money is, but it's really just the opposite. It's where all the risk is, right? But when you sell those options, that 1%, that compounds weekly. And if you compound 1% a week for a year, that's not 52%. That's like 68% when you compound it, right? So you're looking at a way where you can only spend a couple hours a week. As an entrepreneur, you've got other things going on. As a coach, you've got your coaching business and everything else going, right? And you can win at a very high win rate. Very rarely do you ever lose unless a company goes out of business. And it only takes a little bit of your time, and yet you're able to pull in, returns that potentially can 3 or 4x what the typical market returns are. And that's what we developed. That's what I created. And that's what I teach in low stress options. It's really a combination of doing that and then bringing that to the entrepreneurial world, which is where the real kind of creativity comes in.
Got it. So I was going to say you're hitting a lot of singles, not swinging for the fence and striking out, but it's more than singles. Like you said, 68% a year, and that's nothing to sneeze at. I was going to ask a question, and you hinted at it, in terms of, let's say, experience. A lot of people who are listening to this would be like, well, yeah, this all sounds great, but I've never done this in my life. I'm a coach, online entrepreneur. I'm not a trader or whatever. How much experience do you need? And I think you mentioned something about kids doing trades and stuff, so that could be a hint, but can you talk about the experience?
Yeah, you need zero experience. Even if you don't have a brokerage account, have never set up a brokerage account, have never done a stock trade, even if you've never heard of what options are, we take you from that level of experience, right? We also do not do what the standard industry does, which tries to teach you all of this complicated stuff. We reduce it down to like the 1% that you need to understand. We only do one thing 85% of the time, which is selling a put, and then 15% of the time we sell a covered call. That's it. And so you're not going to get inundated with knowledge where you've got to keep learning more and more and more, because this is meant to be something that anybody as a business entrepreneur like myself that runs 4 companies that I can do on the side and not take away from everything else I'm doing. It's meant to be additive to the entrepreneurial experience, right? To the business owner. It's not meant to replace. It's not meant to, take up all your time. So the strategy is super, super simple. You can go through the training in a weekend, but you'll want to go through it a few times. Like everything, you don't just get on a motorcycle pointed down San Francisco's hills, with the curvy, windy road hills in San Francisco, the first time when you've never ridden even a bicycle, right? You start on a bike on some kind of flat, maybe down the driveway, get the balance right, then you kind of step up, then maybe later you buy a motorcycle, etc. Right? So understand that it's going to take a little bit of time, but we have about 92.5% of our people that are taking trades. If they take 50 trades or more, they pay for the course typically within the first 6 weeks. So it's a really high success rate for people that do the work, right? For the people that don't do anything, as coaches, we all know there's a percentage of people that never do anything. They buy, they like the idea of it, but they don't do anything, right? So the knowledge level is really low. The only thing you really have to have, and this is a must, by the way, like you have got to have this. You must have patience and you must have discipline. Okay, you have to have patience to follow the framework. I've done tens of thousands of trades under this framework, and it's really well documented. My partner has done over 20,000 trades as well in the company. His name's John Sanpetro, and the two of us at this point, about 4 cumulative years of trading this strategy, have never even had a single week that didn't make money. Never had even a 0 week, never had a losing money week. And I think anybody that knows anything about the stock market knows that the market hasn't gone up every single week of the year, right? The market goes up and down, but our accounts keep going up because we make the premiums weekly. We really don't care much about the market direction. We can make money whether it goes up, down, or sideways. We just have to be patient and follow the framework. So patience is the number one requirement. The second requirement is discipline. Okay, you must be disciplined. This is an active trading program. And what I mean by that is you don't have to spend much time, but you do have to spend an hour or 2 a week. And if you don't do that, you're not going to make anything that week, right? It is active trading. It's not just putting your money in a mutual fund and collecting a percentage. You're not going to do that, right? This is actively placing trades each and every week. and a little bit of monitoring, although the monitoring is very minor. Typically, we spend about an hour on Monday, and we spend about 5 to 10 minutes a day through the rest of the week, and that's it.
Got it.
Yeah. So,
How much money is required? Do you need a big nest egg to throw into this, or?
this is the beauty of it. You really don't. First of all the figures I'm going to talk about, we don't get a cut of any of this. This is your money, okay? It's your account. We don't have access to your brokerage account. We can tell you the brokerages that we recommend and we show you what we use, and you'll get to follow with us in the coaching and trade over our shoulder and see us taking trades and all that. But we don't get a cut of anything, so you're free to use whatever brokerage you like. It's just that the ones that we teach, you'll be able to follow a little easier, right? Because that's what we show in the trainings. But typical investing, when I was building this framework, I followed a strategy called the wheel strategy for a while, and I really liked it. It had a 98% win rate as well, right? And it's widely recommended and known in the trading world. And it also only takes a few hours a week, maybe 5 hours a week or so of your time. It's not that bad. The problem was to be anywhere useful in terms of return, you needed to have about $250,000 in there, because even with that, you're probably only going to make maybe $40,000 a year in return on that. And that helps, don't get me wrong, but it's not life-changing, right? And so when I created this framework, I wanted something that was as safe as the wheel strategy, as low time requirement as the wheel strategy, but had higher yields. And we accomplished that through the kind of the proprietary innovations that I put into how we trade within the strategy. But it's essentially like a hyper optimized version of the wheel that we do. So it's very safe, takes even less time, but we get those higher yields. So, we like to tell people you need to start out with an account of 4,000 to 5,000, because what you should expect is that you should expect to make about 1% a week. That's our target. Now, I happen to make more than that generally, but some weeks I don't. And so that's our target. That's what we train for. That's what we shoot for. And in fact, people can play with it if they want. You can go up to LSO for low stress options, LSOcalc.com. And there's not even an opt-in on the page or anything. It's just a free, page that you can kind of play with and see what 1% would do for your portfolio. I think people really enjoy kind of visualizing that and tuning it to how much money they have without having to get on with somebody that's like a high pressure sales call. We don't even do those, but there's a lot of the people in this financial world that do that, right? They take you to a higher pressure call, and then they ask you how much money you got and all that before they even give you anything. We don't do any. I hate that stuff. We don't do any of that. But realistically, we say 4,000 to 5,000. What you'll find is that it's one of my favorite phrases I say, and I've said it for years in coaching, and that is momentum begets momentum. When you get a little momentum, it's easier to get more momentum, right? And what we find is that students, as they start making money, they see how little work it truly is, that our word and our promise of an hour to two a week is legit, that the promise of 1% potentially a week if you're trading and following the framework and selecting good companies, that's very attainable as well. And so people see that, and they see the results coming in. And then they start projecting bigger numbers, and they know that if they put some more money in, they'll get that. And so that's when they start contributing more and more into it. But this is the way I started, and it's the way we encourage anybody, is start with just a small amount. Let it prove itself to you. It should prove. This is your finances. This is your side money, right? Like it's gotta prove itself to you. And I started trading this myself with only 10,000 in the account. Now I'm trading a 7-figure account at this point, but I started with that. And so, that's what I recommend for anybody, is start with that 4,000 or 5,000. If you try with less than that, it's just not going to work out. You've got to have enough in there to be able to place a few trades. And so that's kind of a practical minimum. We can select lower dollar stocks and make it work with that 4,000 to 5,000 range. But less than that, it's too small to make any real difference.
Yeah, what's interesting about it as I say, a side hustle for coaches, a lot of times if coaches want to get additional revenue streams, they'll take their eye off the ball and divert their energy and launch new programs, and they're starting to focus on new platforms and all this stuff, and it ends up cannibalizing what was working before for them. Like you said, with this 2 hours a week, who doesn't have 2 hours a week that you can pour into this, and it doesn't distract from your coaching? It's something that's
Yeah.
off to the side, and it's not going to distract you too much.
Absolutely. And so let me give you the prescription. And, people can read about it on lowstressoptions.com on the sales page. It's a long sales page, it'll take you 35 minutes to read it. And that's part of the discipline of this. It's part of the patience. It's done that way for a reason. If you don't have the patience to read, the entire sales page and the FAQ and really go through it, then you're not going to do well in the program. And so it's kind of a litmus test, right? Like, I didn't want to make it too easy. I want people to really go through it. But I tell the story about stealing yourself wealthy. And this story is real life for me. Like, I know, we're all used to the rich dad, poor dad story, right? But we also know that that's a made up story. It's kind of contrived. It's a fictional thing. I actually had a rich dad and a poor dad. My birth father was, poor. Like, we grew up very lower middle class. I never wanted for something to eat. Like, we always had enough money to get by, but we didn't even own a car. Like, the only way we had transportation was because my dad worked for my grandfather at a car dealership. And so we could drive a used car off the car lot. Like, we were very much in that lower middle class. I mean, we had our own garden to raise for food. We had, rabbits and chickens for eggs and food and stuff. Like, we did everything we could to save because we just didn't have much money. So I grew up at that level. And my dad had this kind of poor mentality mindset because he just didn't have the education, right? But when I was 16, I went down to Brazil as an international exchange student through the Rotary International program. And just by the nature of international, like, a Brazilian host family is probably pretty well to do. They're pretty well off in order to be able to send their child overseas and stuff. So, and it's an exchange. So everybody that I stayed with had a child that had come to the US, right? And so the family that I went to, my father in that family, his name was Maximo, and he was quite wealthy. And he taught me the value of not only saving a little bit, skimming a little off the top of your business. And that's why I say stealing yourself, you're stealing from yourself. But there's another dimension to it. He did it in a 80s economy when Brazil had a 30% per month hyperinflation. 30% a month. Like, I would get $100 a month to go spend, and I wouldn't cash the 100. I would cash it like $10 or $20 at a time, because if I exchanged it, I would lose 30% of the value at the end of the month. We complain about inflation in our economy right now. You haven't seen nothing in the US. Like, when you see 30% inflation, it is insane. And I don't mean annual inflation. I mean monthly, 30% monthly. It's insane. Okay. They literally took $1,000 bill, and you went to the grocery the next day and they had just chopped 3 digits off of it, and now it was worth $1 where it used to be 1,000 the day before, right? That's the economy. And they didn't even have time to print the new bills. So you were carrying these like sacks full of $1,000 bills to pay for a loaf of bread and stuff. It was just absolutely absurd. Well, this is what my father taught me. He taught me how to steal yourself wealth. He said there's really two components of it. And quite honestly, this lesson is worth life-changing tens of thousands of dollars in your life, even if you never join our program or anything else, just the lesson I'm going to teach you right now. What he did is every single day when he would close out the books, he would steal a little bit off the top. 5%, if it was a really good day, maybe 20% of the daily closeout. And instead of depositing that money in the bank, right, he would take that and he would walk over to a currency exchange and he would buy US dollars. And then he would store the US dollars. And he did that every day for years before this hyperinflation hit. That was his modus operandi. That was his MO, right? That's just how he rolled. Every day he would steal himself a little bit of money and he'd convert it to the dollar, because he knew he lived in Brazil and their monetary system wasn't very great, but he knew the dollar was stable. And so that's what he would do. Well, then when the hyperinflation hit, he had all this money socked away in dollars. He was able to take out a little bit every week, take out a little bit, cash it in to the local currency and pay payroll. And he never had to lay people off. He didn't have to close down when places were going out of business left and right. And so the two steps that he did was he was taking a little bit at very frequent intervals out of his business, a little bit of profit off the top, but then he was putting it into an asset class that grew disproportionately to his monetary system. And, today a coach could very easily do this just by taking 5% out of their income every month and doing it on a weekly basis. So when you reconcile your Stripe transactions or your merchant account or authorized net or whatever you use, right? When it hits your bank account, just take 5% of that and stick it away into another investment. Now, that could be Bitcoin. You could just buy Bitcoin and hold on to that with that 5% and let it kind of continue to accumulate as the dollar in the US is devaluing and et cetera, right? Or it could be like what we do. And what I do is I take that money and I put it into my trading account, and that funds my trading. And I use that trading to generate revenue for my business. And so rather than just having like a year's worth of reserves or 6 months worth of reserves sitting in the bank account, drawing, almost no interest at all and honestly losing ground to inflation, I put it in a trading account. I leave some of it in a money market where it's not touched so that it's safe and secure and liquid. But then I take a bunch of it and I trade with it and generate more profit. I've already got 2 of my companies now. I haven't started doing this because I've chose to continue to let the funds grow, but I could. In 2 of my companies, they could be completely paid all of their operating expenses just out of the weekly profits from the trading investments. Think about that for a minute. If you could run a coaching business as a net zero operating expense, we're on Zoom right now doing this interview. You got some Zoom costs. If you could pay your Zoom fees, if you could pay your hosting fees, if you could pay all your domain costs, you could pay all your merchant fees and have all of that stuff paid out of the profits, just the profits of your trading account while the trading account itself is still growing, that to me is a competitive advantage like no other, especially for a coach. And I can really speak to this point, okay? Because I've coached thousands of students at this point in my life. And I can tell you the most powerful thing that you can do as a coach is be non-needy and say no. It's the hardest thing to do. And if you got a mortgage to pay, it's not easy to say no, is it? You take on clients you shouldn't take on. I know you've been a coach for a long time. I know you've taken on some clients you probably wish you didn't take on.
A few, yeah. And that's what I like about Ben Settle's stuff is he's probably the guy that comes to mind when I picture non-needy pushing, the people he doesn't want to work with away. He's very intentional on that with his emails, his copy, and everything else. And sounds like your guys' sales page is designed to weed them out, but also your patience and discipline to read through that page and understand what it is. So I want to make sure I have the link right. It's lowstressoptions.com.
That's correct.
And people can get started right away.
Yeah, absolutely. And when you go to the sales page, there'll be a button at the top of it to register for our next upcoming class where we go and do a live presentation and discuss and answer questions and all of that. So, if people want to find out more, opt in there and then they can join us on a live call. And I do multiple live calls every week and they're always live. And they're just like this. There's Zoom calls, they're meetings, they're not webinars. There's not a I can't stand all the traditional marketing webinar slide presentations where it's all contrived and the big price offer stack and all of that stuff that people have just seen till they're blue in the face. We don't do any of that. It is a live discussion. There'll probably only be about a dozen people on the call. Like we do frequent calls with small groups to keep it small so that we can answer people's questions and really inform them before they ever spend any money with us.
Great. So lowstressoptions.com. Troy, thanks for coming back on the show. It's a really cool topic, which hasn't been covered in, 900 plus episodes. So thank you for doing this.
Oh, you're welcome. And, I definitely, like any of your listeners that come, make sure they tell me that they came from you and I'll be happy to hop on a call with them and make sure that they're comfortable before they do anything with us.
Awesome. Thank you. So we've had Troy Brousard back on the show. Go check that out. I'm Marc Mawhinney, and I will see you next time on Natural Born Coaches.
If you'd like to learn more about the low stress options framework, then please join me on a live call. You can go to getlso.com to register now.